What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to give you 5 stocks to buy in January 2021. I will provide a stock and dividend analysis. I own all 5 of these stocks, and I'm going to continue to buy these stocks, and I am long in these stocks. So let's start right now. So that first stock would be Main Street Capital, which is a business development company. So what business development companies are, and I will show you on their website, they basically acquire businesses and they acquire things, and they're kind of like their own empire, but there's a loophole so that they don't have to pay taxes. They have to distribute money to investors. I think it's around 90% or so. Don't quote me on that, but I'm pretty sure what they do is a business development company, so that they don't have to pay a tax or a penalty, is they have to distribute their earnings to investors, kind of like real estate investment trusts, so that they don't get dinged. Most of their profits go to the investors, and then they pocket a certain percentage. So let's look at Main Street Capital real quick. So Main Street Capital provides a one-stop capital solutions for lower and middle market companies seeking to grow or transition ownership. They offer entrepreneurs, business owners, management teams, and a number of advantages to help each business realize its full potential and generate wealth for the owners. So basically, their long-term outlook, as a publicly traded investment firm, we are not required to return our investors' capital by a specific date, as is typical most institutional funds. This allows the flexibility to be a long-term partner in both good economies and more challenging markets. So one of the things about these guys is, so they provide debt financing solutions to middle market companies for acquisitions, recapitalizations, and refinancings. So basically what they're doing, is they're hooking people up and they generate revenue, but they have to distribute it back to the investors so that they don't pay a penalty. So let me show you their dividend history. This is why I invest in these guys real quick. So first of all, they have a 7.81% dividend yield. If you look at their history as a business development company, they have increased their dividend over time. So almost 18.5 cents, 19, 19.5, 20.5. That's what you want to see as a dividend investor. It's increasing its dividend over time. Now, this is a very stable business development company, if you ask me. Again, I'm not a financial advisor, but let's look at certain stocks who have not done well that are business development companies. Prospect Capital decreased its price over time, price per share. Really hasn't increased its dividend. It's kind of stagnant. Last I read about the other one, Capitol Finance, is they stopped their monthly dividend. So, that's one thing that's very interesting. Main Street Capital is a very stable stock that is in the business development company. So that's my number one stock right now, not in order, but these are 5 stocks that I will continue to reinvest the dividends and continue to buy for this month. And I'll show you something interesting tomorrow with my M1 Finance dividend portfolio. And guess what stock it has to do with? We're going to jump to the next stock right now, which is Pfizer. Pfizer is one of the hot companies out there that everybody has discussed with the mRNA vaccine technology, and it's very exciting to see that. I was just chatting with a pharmacist that works out in my gym, very good guy. We were just talking about the mRNA vaccine. We don't understand why people are not taking the vaccine that are working in healthcare, but this incredible technology is just one of many that Pfizer carries. Pfizer not only carries a very potent vaccine to combat COVID-19, which eventually will be eradicated. COVID-19 will be gone eventually. And the vaccine, there will be more and more companies. I'm just looking at Johnson and Johnson. That those guys will eventually pass their vaccine, and AstraZeneca, I just saw in the news, passed their vaccine in the UK, and it doesn't need to be refrigerated or freezing cold compared to Pfizer and Moderna. So it's going to be very interesting to see this race. So once the virus goes away, what's going to happen to this pharmaceutical company? Okay, if you look at Moderna, okay, Moderna's trying to focus on other things. Sure, its vaccine is distributed, and what happens when the virus is gone? You got a company like Pfizer sells other pharmaceutical products. Okay, think about this: Viagra. Okay, they sell statins. People that have heart attacks or strokes. Part of the core measures are they are discharged on statins. So Pfizer sells those. They have acquired many companies too, as well. Many people don't realize that Pfizer owns, some stuff that's out there. So they are a very strong empire. And for $37.13, as I jump to the dividend history real quick, this is a very attractive stock. And I'm going to jump to the dividend history. Okay, as of right now, Pfizer yields a 4.2% dividend yield, annualized dividend of $1.56. Since it started to become or distributing dividends, probably by the call of the board of directors, started at 20 cents, then 22 cents, then 24, then 26, 28. Now it's 39 cents on 1/28/2021. So it has increased its dividend over time. So let's think about this. A pharmaceutical company generates a ton of revenue. Okay, it's cheap. Okay, it's not going anywhere. Pfizer's a big company, so you want to diversify your portfolio. I just discussed Main Street Capital, and Main Street Capital basically is a business development company. So I fully believe that you should be well diversified in your dividend portfolio, or your traditional IRA or Roth IRA, or any stock portfolio that you have. Pfizer is a great one for dividend investors so that you can earn passive income. Now, this is a stock that's not going to go to the moon. Okay, it's not going to jump like crazy. It is slowly growing, and it's not very risky. So most of us who are dividend investors invest in Pfizer for the dividends. So I'm going to jump to the next stock right now, which is Altria. Now, if you look in the past 5 years, it hasn't done too well against the S&P. But what this makes this stock very special is its dividends. So the first thing about Altria, I'm a registered nurse. I can tell people to stop smoking. It doesn't matter if they just get out of open heart surgery. It doesn't matter if they have a trach. I have seen, people outside in public smoking with a trach like this right through here, like their neck, like that guy in the X-Files, okay? People just don't care. People are going to smoke cigarettes. Look, you can educate people as much as you want with the vaccine. There are going to be people not taking the vaccine with COVID. Now, if it was like polio, where you're going to be in an iron-lung, I think that would scare a lot more people, and that would convince them to get the vaccine. But many people are not getting the vaccine. Same thing with Altria, with smoking. People are still going to smoke, and they don't care. I don't understand. I mean, there's enough evidence out there that it's bad. I just don't get it. I really don't. But it's such an attractive stock right now for dividends. And I'm going to show you its dividend history real quick. So as of right now, Altria yields 8.3% dividend yield, right at $41.59. If you look at its history, so far it seems like it's pretty stable. It went from 41 cents in 2012 all the way to 86 cents on 12/24/2020. That is fantastic for dividend investors. Now, for me, my M1 Finance dividend portfolio, that's exactly what I want. I want increasing dividends. I want something that is not increasing its price over time. This is exactly a beautiful stock to have. Look, and again, I'm diversified. I just said about Main Street Capital, okay, and the business development companies. I just discussed Pfizer, which is in the pharmaceutical company. And Altria is kind of like a sin stock, pretty much. And they are tapping into the marijuana business a little bit. So, with the vaping and marijuana, people are tapping into that. Let's talk about that next stock. So that stock would be Stag Industrial. So this is a very popular monthly dividend stock. This is a stock that is mostly focused, it's a real estate investment trust that distributes a monthly dividend. And it is focused on buildings. It owns industrial buildings. So people that, are putting their trucks and, industrial equipment there, they pay these guys rent. So as I said with business development companies, the investors get 90% usually of the earnings, and then the company, the real estate investment trust pockets that 10%. So Stag is doing very well in the past 5 years against the S&P. It's up and down. It's a little stagnant. But what I like about Stag is its dividend history. So this is one that's a little bit cheaper. It's starting to get bigger. It's well diversified. Everybody talks about, realty income and EPR properties. EPR properties, real quick, is entertainment properties. So those guys were hit big time from the bug hitting. Okay. Realty income took a little bit of a blow, but it's slowly going to get back up. LTC Properties is a real estate investment trust. It's a monthly dividend stock that distributes a monthly dividend that focuses on long-term care properties or skilled rehab properties. I do have those guys invested in all. I actually have all 4 of these invested. So the thing about Stag is it's diversified. So, it's a well diversified stock. Now I had previous videos about other dividend stocks, but this is well diversified in a certain area. It's what makes it special. It's what makes it a great real estate investment trust, because you should be diversified. What happens if realty income takes a hit? What happens if I had all my eggs in one basket with EPR properties? I'd be screwed, pretty much. I wouldn't be getting a dividend right now. So EPR, I'm just going to leave them alone. Once they start distributing their dividends again, I'll be right back with them. But as of right now, I'm happy with what I see with Stag. Now I'm going to show you its dividend history, and there's a lot of potential with Stag Industrial Complex. So 2014, it hit like 10.5 cents a share. Then 2015, 11.2, 11.5, 11.6. And then it hit 12 cents. So it yields a 4.76% dividend yield. But these monthly dividends, the annualized dividend is $1.44. So the one thing that you can have going against you with Stag is you need to make sure that you have a decent amount of shares so that you can reinvest the dividends. My goal in the long run with Stag is to have enough so that I can pretty much buy a share each month. And then the money will start buying more stocks and everything. That's what I have with one of the business development companies, Gain. Eventually, I'm hoping that will overtop everything. So I know I need to have more money in Stag, because I have a monthly dividend strategy of earning $1,000 to $3,000 a month of my monthly dividends and $2,000 to $4,000 a month of my quarterly dividends. So that's one thing that I haven't in mind and have planned. So I'm going to jump to this last stock. I'm sure you've heard of me venting about this company numerous times. It is a very popular and huge company in Northeast Ohio, which I'm going to jump to, and it's in the energy sector. So this stock is First Energy Corp. Now they have some issues going on. First of all, they have some issues with corruption that's going on. They are a very powerful energy company in Ohio, in kind of like the Midwest and a little bit towards the East Coast. They are something they're interesting. I don't like them as a company, but I can't let my emotions get the best of me because it yields a 5.22% dividend yield. I'm here in my apartment complex. Guess who runs it? Ohio Edison, who is owned by First Energy. So I got to make my payments every month, or else I don't have any heat. So, and the revenue is increasing because they can do whatever they want. They can impose their will, and it doesn't matter because you are at the will of this company. So that's what's interesting about these guys. I do think that they have some issues, but I'm going to show you its dividend history, which is very attractive. So as of late, it has increased its dividend from 36 cents to 38 cents to 39 cents with a 5.2% dividend yield. So this stock is going, it's just going to keep on going. I'm going to continue to reinvest in this stock. I'm not a fan of them as a company, but let me tell you, I cannot let my emotions get the best of me. This is a stock that you can't say no to in the energy sector. So I own all 5 of these stocks. I am long in these stocks, and I plan on continuing to reinvest these stocks with my dividend portfolio. And tomorrow night after my shift, I'm going to show you my M1 Finance dividend portfolio and some changes that I made. And I'm very excited to discuss with you guys. But thank you again for watching this video. If you are new, make sure you subscribe to this channel and hit the notification bell so you don't miss future videos. Don't forget to smash that like button. Again, I don't believe in charging anyone with a Patreon account. All I ask for you to do is like, subscribe, hit the notification bell, watch these videos for free. I enjoy doing these videos for you guys. I enjoy showing you what I invest in. And I also am going to post a Fundrise video because I earned some money from Fundrise, and I'm really happy with what I earned with Fundrise, especially when the economy took a little bit of a blow. So I hope you guys have a good Friday, have a great weekend, and stay tuned to this channel. Again, keep on looking at it. I'd like to thank my buddy Robert Nathanson from Palmia Beer. I angel invested in his company. Him and I have become very tight. Palmia Beer is in, I was almost going to say Cincinnati, but it is actually in California, and they are blowing up. So I'm very excited to see his company grow. Hopefully it will start hitting the bars over here and with vendors. I'm just very excited to see his company grow. I am going to give him a shout out on my Instagram. So if you are new to my channel, Darth_Dividend is my Instagram. And I'm just very excited to see how this year is going. We are almost at 4,000 subscribers in this channel. And again, 4,000 people on this channel watching this for free, not being charged, not requiring $5, $10, $15 a month just to watch or see stocks that I'm hot on or stocks that I'm looking at. All of that's free on my YouTube channel. So thank you again and have a good one.